Greetings. Welcome to my weekend market recap, 14th January 2023. I'm Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle superiorprofit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems for my trading. All the components work on the Metastock platform and the technical analysis component works on TradeStation as well. That was the last slide. Let's continue with the live systems. Other than the usual global and USA market analysis, I look at a number of stocks. I will explain how I found them, and I will also look back and review some of the stocks that I shared earlier on Twitter, as always, before knowing the results. We'll see how they turned out. But first, let's start with a look at the global markets, starting with Australian index, all ordinaries. It is always good to look back and see how these Q analyses are working out as we move forward. When all ordinaries came to the trend line support, that is coming from very far away in the weekly chart. As Q traders, we know that was the point to start looking for buy candidates. And we could do that starting from this day in the daily chart when we had a bull release signal after price went up from trend line support. That was the buy point. I wouldn't buy the index, as you know. I prefer to buy individual stocks, not the average of many stocks, which is the index. What about now? Now all ordinaries is at the upper boundary. It is also at the watermark resistance, at which point bearish headwind came earlier, which could push price down significantly. It is overbought for 3 days, shown by the stretch band indicator. All these are saying that this is not the time to buy. Can it go up further? It can, but Q traders, including myself, will like to buy at the low risk entry point, which was here, not here. The weekly is looking bullish. The trend line resistance in daily as well as weekly is some distance away. So it may still go up further, but I'm not going to buy now. If I bought at this point, I am continuing to hold partial position with trailing stop. Partial position profit I would have booked. That is the standard Q guidelines, and these guidelines help a lot. Because of this guideline, I was able to end 2022 with a profit. And even today, we will see how this buy at low point helps in today's market as well. That was all ordinaries, Australian index. Moving sideways, preferred trading direction, none. And you will see whether we use index or futures, ETFs or stocks, the technique in terms of Q technical analysis is the same. Topix index Japan, this bullish headwind came last Friday. This was a 4 days week. When we had the bullish headwind that came after the bullish indecision, I mentioned in the last market recap that we could look to buy. What kind of setups those would be? Reversal setups. That analysis was again useful, also known as profitable. Price went up enough to give profitable swing trades. What about now? Now price is too close to the trend line resistance in daily. Again, that is not a point I would like to buy. What is the trend? Still downtrending. My preferred trading direction? None. What would I like to see? I will be happier in terms of trading if price goes to the trend line resistance and reverses from there. Then it will be easier for me to identify a low risk shorting opportunity. On the other hand, if price breaks out of the trend line resistance, I may not have low risk entry point. I may have to wait for a pullback and for price to go up again, thereby giving me a flow trend following long setup. Both directions are possible, of course. However, the easier trading opportunity will come if Topix can reverse from the trendline resistance. Downtrending, currently no preferred trading direction. China CSI 300 index. What is the trend? It is moving sideways. We know that instantly because it is inside a triangle pattern created by trendline resistance and support in daily. In the weekly though, price has broken out of the trendline resistance. Therefore, if price can break out of the daily trendline resistance, I'll be happy to look for buy setup. The longer intervals bullishness may indeed result in price breaking out of daily trendline resistance. However, I will wait for that to happen. What may be even better in terms of trading, for me at least, that let price reverse a bit from the trendline resistance, create a higher low, and then break out of the trendline resistance, thereby giving me a low risk breakout entry point. If it breaks out straight from here, then it may be possible to look for breakout setups, but those will not be so low risk as if price could pull back little bit and then break out after creating a higher low. Currently it is moving sideways and I am not going to look for any trade setup right now. India's Nifty 50. In the last market recap, if I remember correctly, I mentioned that if this trend line support is broken, I'll be happy to short again. However, it did not break. It tried many times to break this price level, but it didn't. Friday's color changed from bearish red color to neutral yellow color. If price can go up from here, then I am happy to look for buy setups because those will be low risk buy the low entry opportunities. I will look for that, and if price reverses down, breaks below the trend line support, then I will look for shorting opportunity. In this case, both the up move as well as the down move will give low risk entry points in long and short directions respectively. Currently, I'll wait. That is a look at the global markets. Okay, why not look at FTSE also? UK market, we always look at that too. Change the symbol to FTSE. FTSE is clearly bullish, but it is also overbought, shown by the stretch band indicator, overbought for many days above the upper boundary level. It is too extended to buy, and even jump and thrust are hitting the extreme levels. I will not buy now. When could we buy? When we had the flow trend following long setup, at which point price also went up from the yellow direction line. That was a flow trend following long setup and probably a pullback long setup as well. That was the entry point. We could book partial profit along the way when the risk distance was covered, as I do, as is the standard Q guidelines, and then we could continue to hold the remaining position with trailing stop, making sure that the trade is guaranteed profitable from profit booking point onward. Trend upward, no preferred trading direction, it's extended. Let's look at the global markets. What about the USA market? Let me switch from Metastock's Q Global on Metastock to TradeStation's Q Elite on TradeStation. Let's look at the market ETFs. SPY. Is it trending? No. Inside triangle pattern. Many trend line resistances, many trend line supports. Where is it in the triangle pattern? At the upper edge. Do I like to buy at the upper edge of a triangle pattern? No. I would rather have it reverse. That will give me easier shorting opportunities. Even if price was to go up next week in the beginning, then there will be another trend line resistance. If it goes up further, there will be another trend line resistance. I'll not have easy buying opportunity until it can clear all the trend line resistances. On the other hand, on the short side, it's easy. If it goes down by 1 or 2 days, maybe even one day, I can look for shorting opportunities, especially if price little bit goes above the trend line resistance and reverses, creating a false upside breakout, at which point the weekly will also create a false upside breakout. That is what I would like to see in terms of trading. Currently it is moving inside a triangle and I am not going to buy anything. Where did I buy? If you look back on my Twitter posts, I was buying here. I think all of them were in a profit. The ones that I publicly shared, I think all of them, or at least 90%, maybe all of them, you could check, are in a profit by now. And I have started booking profit. When the market was overbought. I shared those tweets also. I will review some of them along the way today. Let's look at the other market ETFs first. QQQ. Now let's look back to previous market recap. In that market recap, I mentioned that among the market ETFs, I would prefer to buy QQQ because the trendline resistance was far away. And now looking back, you see how accurate and profitable that decision was. QQQ went up strongly this week. Decision to buy that I shared earlier, and I did share individual stocks also on my Twitter page. Those worked beautifully. Now am I going to buy? No. It is inside a triangle. I bought near the lower edge of the triangle. Now it is approaching the upper edge. That is not a low risk entry point. Weekly also has trendline resistance. Is it bullish, bearish? Is neutral because it is inside a triangle. Preferred trading direction? None. My preferred trading direction was long at the lower edge. Now I am not going to do anything. I am holding some long positions. In fact, some I identified on Friday. Individual stocks may give buy setup or short setup, even though my market view may be neutral. However, if market view is neutral, I am very cautious about buying. I don't buy so many stocks. If my market view is bullish, I am comfortable buying more stocks. If my market view is bearish, I don't buy stocks. Now it is not bearish, it's moving sideways. I have some, I have no short holding, I have some long holdings now. Let's look at DIA. Again, inside a triangle pattern, right in the middle of the triangle pattern, no trading zone, not going to buy, not going to short also. And IWM, again, this was far away from the trend line resistance in the previous market recap. So I was more willing to buy IWM. That decision was also very profitable. Now it is too close to the trend line resistance in daily, not going to buy. I have already booked profit in, at least partial profit in all my long positions, other than the ones I initiated on Friday or Thursday. Now look back, also see how the bullish headwind worked beautifully once again at the bottom, and looking back further how the bearish headwind at the top worked beautifully as well. Unique reversal signal. All the market ETFs are moving sideways. I am not going to have any bullish or bearish view. I have a neutral view on the market. What about the market internals? I mentioned that the market is already overbought. It became overbought on Thursday itself, and that we can see from market internals too. Let's look at the very useful single chart market breadth total view. Okay, I refreshed the page. Still some plots are not coming at the bottom. Refreshing again. Sometimes my internet is slow here in the village I am living in Thailand, and it is more so during the YouTube live sessions. Some kind of conspiracy probably. Well, I'll come back to the market breadth. We have few other things to look at. Let's go to Twitter. On my Twitter page, Superior Profit, I regularly tweet about my market analysis. And this is one I shared on January 12th. That was Thursday. January 12th, midday, Eastern Standard Time. What I showed was that market was overbought from this Q edge analytics, breadth analytics. 88% of the stocks are above mid Bollinger Band here. 42% are above the upper Bollinger Band here. And in one day, percentage of stock above upper Bollinger Band had gone up by more than 15% here. All those three were telling that market was too heated to buy. That was what I shared on Thursday. The percentage of stocks above upper Bollinger Band for S&P 1500 stocks, it was 42.5% calculated in real time. How is that percentage today at the close of Friday? From 42.5, it has come down a lot to 28.3%. It is still overbought. Anything around 30 to 40% is overbought. So it is still overbought, but from above 40% it has come down significantly. Once again, my analysis using Q edge bucket analysis was accurate, and it helped me to book profit in my long positions, at least partial profit. And I didn't look for shorts. Market was too bullish to look for shorts. There was no bearish signal in any of the market ETFs or other market analysis. Only analysis signal was that market was overbought. So I stopped buying, or I bought very selectively. Again, my tweet on Thursday came out very handy. And if you had Q systems, you would have noticed that already on your own computer. How is the sector industry stock breadth now? Bucket analysis showed that market is still overbought. That means we expect the market to be bullish, and that is shown by sector industry stock advance decline from 1 month to 1 day. Everything is green. It is overbought, but it is bullish. There is no question of looking for short trades. We may get ready for that, but not yet until we get the signal. That is the breadth analysis from Q edge. Let's go back to market internal study from this very powerful market breadth total view. This plot, 3-month new high low, is also saying that market is overbought. It has hit the upper extreme level. Every time it does that, almost like a clockwork, it pulls back. Does it always pull back so much? No. But we don't need market to pull back so much to have a substantial loss if we are swing trading. Therefore, whenever this signal is at the upper extreme level, I am very cautious about buying. The percentage of stocks above 50-day moving average is approaching the overbought level, but not there yet. So it may move a bit more before it gets overbought. Now, last couple of days were quite bullish, not massively bullish in terms of percentage changes in a day in the market ETFs, but they were bullish. They recovered quite nicely. But notice one thing, something is conspicuous by its absence last 5 days. There is no bullish breadth signal. The signals that we see here, these are not signals on one ETF or index or one stock. These are breadth calculations based on thousands of stocks. And for the whole week, though market went up nicely, there is no bullish breadth signals. There is no accumulation count for the last 5 days. There is no Eureka. That is also showing that it is bullish. Of course, price is going up, but that's telling us to be cautious. There is no accumulation count. There is no heavy, broad, deep buying in any of the major indexes, and that is reflected in the absence of any accumulation count in this total view index, custom index. What kind of stocks are favored now? Small cap versus large cap. I showed it in the previous market recap also. It was going up. Small cap was doing better than large cap. growth versus value, I mentioned in the last recap that it was starting to improve. It is still in a downtrend. It still doesn't have, okay, you may say it is starting to go up now, but not very clear higher high, higher low. So small cap you could look for, and you might be agnostic to growth or value if you wanted to buy. That is from the high level analysis. Again, market view is neutral. It is overbought. Inside triangle pattern for all the market ETFs. That's not the time to buy many stocks. But if you wanted to buy, you could look for small caps and be agnostic to growth or value. What about technical breadth? Very powerful analysis again, and I will highlight some changes in the finder I'm doing. Incremental changes makes trading even more fun, and I'll demonstrate that. Remember, I tweeted, if you had noticed, that I found some buying candidates on Friday, and I mentioned I will show how I found them. You could find them in top down analysis, bottom up analysis, or fundamental first. I'll use the few new features I added to Finder, still not released publicly, to find that stock. That's how I found it, but you could of course find it from top down analysis also. I used bottom up. You will see it's quite fun to use the systems in that way. Let's look at technical breadth. First at the longer term weekly picture, balance between bears and bulls using QFinder. Q edge showed bullishness from 1 month to 1 day, and that bullishness is there in QFinder technical breadth also. All signals 92% bullish, strength signals 97%, continuation 94, reversal even 70%. Everything is bullish. And when it is so bullish, when market is overbought from multiple angles, I start to look for percentage of stocks showing bearish headwinds in the weekly interval. Look for it to cross the threshold of about 2%. It's nowhere near that, below 1%. So I am not going to be bearish now from that perspective. And Friday's market also bullish, 64% of all signals bullish. However, strength signals are more bearish than bullish. Trend continuation bullish, reversal also bullish. Overall, it is still bullish. And I mentioned some changes I'm making that will be available to the people who have the momentum addendum to Q Global and Q Finder. There are multiple momentum signals, HGSI like signals in the momentum addendum. These plots show how their breadth is. Distribution of stocks between bullish momentum versus bearish momentum, at least 3 bullish dots, at least 3 bearish dots. Not so simple, the calculation is a bit more complex than that, but let's simplify in the video. For usability, that's enough to know that showing the distribution between bullish momentum and bearish momentum by looking at stocks having at least 3 bullish momentum dots or at least 3 bearish momentum dots. That is also bullish. And in terms of actual numbers, 45 stocks have 3 bullish momentum dots, 23 stocks have 3 bearish momentum dots. That's in the universe of stocks. The momentum scan gave 1666 records output. Out of that, 45 records have at least 3 bullish momentum, 23 records have at least 3 bearish momentum. And the last graph is showing whether it is too extended. again, it's a balance between bulls and bears. Is the extension more to the bullish side or bearish side? Using jump thrust, it is more extended to the bullish side. Graphical representation. Everything is bullish. The percentage of stocks that is giving the maximum bullish signals coming from mid price level. So it is not overbought from technical perspective. Bullish, overbought, but there is no bearish signal. That is what we can see from this analysis. What analysis we carried out? External view, that is look at the market ETFs. Before that we looked at the global markets too. For USA market, let's say we focus on USA market because we have in-depth analysis using the Q systems I'm doing here now. So external view moving sideways. Internal view using market breadth studies, overbought. Sector industry stock breadth bullish. Bucket analysis overbought. Technical breadth bullish. There is no bearish signal. So it is overbought, bullish and no bearish signal yet. That is why you and I may still look for some buy setups. Now, how are the mega caps? We saw small cap is doing better than large cap. How are the mega caps? Let's look at the mega cap tech index, part of Q Global Market Breadth. It came to the watermark support, created a false downside breakout and went up somewhat. It is still inside the triangle pattern. We could buy at the lower edge of the triangle pattern. Did we buy? I bought, yes. How do we know? Because I tweeted about it. Every tweet doesn't mean I'm buying, but those who know me may know or may think that if I'm doing all the work and posting, I may as well buy some instrument on that stock, maybe options, maybe stocks. Which mega caps did I tweet about? Let's look back. It's always good to look back and see what is the secret behind me making a profit even in 2022. On Jan 3rd, I tweeted about Netflix, showing that it has a bullish seasonality that I analyzed using Q season program, and I showed average percentage when up in January is very high, 28% for Netflix. And I mentioned that Netflix could be traded ahead of earnings using a defined risk strategy like a bullish vertical, and I shared with some traders that I indeed took that trade. How did Netflix work out after Jan 3? Let's look at the stock. This was January 3. That was the time when the mega cap custom index was at the lower edge of the triangle pattern. That was the time when I started buying based on Q global market breadth also. That was the time when I decided to take a options vertical, bullish vertical in Netflix, and that has worked beautifully. Now it has hit the upper boundary and the watermark resistance level. Now my trade has hit the profit target. The guidelines is to book at least partial profit, and before earnings, I personally don't like to hold trades, swing trades across earnings. They are swing trades, they are not long-term holdings. So I like to close them, and it has hit profit target. It has covered much more than the risk distance. The trade worked out beautifully. Again, a stock that I traded based on the Q analysis shared publicly before knowing the results. Was that the only mega cap that I shared? No. And was that the only one I traded among mega caps? No. On the same day, 3rd January 2023, I shared a tweet on Facebook, Meta. Meta had a gap open day and it was breaking daily trendline resistance here. You can see that in the magnified view also, it's the daily chart. And it was also breaking the trendline resistance in 30-minute chart. You can see that in the magnified view. In the 5-minute view, it came to the early range low, reversed, and right at the time I shared it, it had a very bullish shape, bullish color candle in 5-minute interval as well. That was the time to buy with low risk, putting stop just below day's low. That was 3rd January. You could trade it using options vertical. Those are defined risk strategies. Therefore, you would not worry about or would not place any stop loss order as you would place with a stock trade. How did Facebook or Meta work out after 3rd Jan? Let's find out. Meta, 3rd January. This was the day with a gap up open. Since then, it has gone straight up. Not a single red candle. For a trade taken on a gap up day, the stop could be placed below, somewhat below the day's low. The stop was never approached. It has gone above the upper boundary level. It has hit the profit target. Reward has covered much more than the risk. Again, using Q guidelines, you could book at least, if not all all profit in the trade. Did I share only mega caps? No. Let's look at another tweet I shared and see how the analysis can be done by me and therefore can be done by you, and trade based on that and hopefully trade profitably. That's what these reviews are showing. On the same day, 3rd January, and remember that time not many people were bullish, isn't it? A common theme in my trading and Q guidelines. When others are not bullish, I'm able to buy because I have a very comprehensive view of the market using Q systems and I'm always looking to buy at low point. Now others are bullish, but I'm saying I'm booking profit, at least partial profit. That's the secret behind me making a profit in 2022 also, and it's continuing. This is on 3rd January. I am sharing on Nordstorm JWN. What did I see? The very unique bullish headwind signal, reversal signal that was coming at watermark support level. If price could go up from there, it would create a false downside breakout in both daily and weekly. Price was at extreme low and we had a bull release signal also. Again, JWN has liquid options. You wouldn't worry about stops if you traded it using verticals. On 3rd January, I shared it. Let's see how this stock, not a mega cap tech stock, how did it play out? Let's use Q Global JWM. JWN, I shared it right when it was displaying the bullish headwind signal. After that, as I anticipated, it did complete the false downside breakout, and you may say straight up went up. Why I say straight up went up? Because all the candle colors are green, no, not even yellow. Once again, it covered much more than the risk distance. You could happily book profit when you saw market is overbought from multiple angles, and when you saw other people are turning bullish. Most of the retail traders, they are late to enter the market. When they enter, it may be a bit late. So if everybody is telling market is bullish and your trade already has covered risk distance, why not book some profit? Of course, I don't worry about what others are doing. I book profit when risk distance is covered. That way, I need only 60% success rate in my swing trading. And if you follow Q systems, if you have to find out for yourself, but you may follow the ideas I share and see how they are working out. Not mean that you cannot do better than me or you may not do worse than me. You have to find that out. Everybody is different, though the system may be same, but they seem to work out quite well for me, isn't it? So these are the few stocks I shared. They all worked well. What about today? Today, I now let's look at a number of stocks as of Friday's close. I shared one tweet on Friday. Why don't we look at that? And I used real-time analysis in that stock. Didn't close quite like that. But let's look at the post. This was on Friday. I shared it in the morning session. What is Q guideline? We may get ready to buy using morning session analysis, real-time analysis, but not hold the trade as a swing trade unless the setup is confirmed at the close. And if you traded using real-time precise entry chart, you could book profit, not let it go into loss if you see the signals were not confirming. I shared it in the morning session, 10:20 a.m. New York time. What did I see? This stock, this was actually INCY, INCY. I shared the ticker in the Traders Club that is open to all Q traders. There is no fee for the club. INCY. What did I see? It was very nicely breaking out of a triangle pattern. Before that, it was in a squeeze. It was not in a downtrend. It was going up, higher high, higher low. Here also higher high, higher low, and then breaking out with a low risk entry point. That was my consideration when I shared it. If the chart closed like this, it was definitely a Q buy setup using breakout techniques. But it did not close like that, which is fine. Let's look at INSEE. At the close, it has an upper tail. It still closed above the trend line resistance. What is Q guidelines? Not to buy at the close of the day on Friday, but watch it on Monday. If it can go above the high of Friday, that's the entry point. Or if you are using real-time charts, you could make more precise entry using the fine-tuned chart. So I did take a small position in INSEE using real-time chart. I booked partial profit when I saw it was not working out. I'm holding a small position. If it continues to go up, goes above the high of Friday, I may add to my position, make it usual size again. If it goes below Friday's low, I may exit the small remaining position I am having. Again, I entered using real-time charts. I already booked partial profit. I will not like to let the trade go into a loss as a whole. If you use daily chart, you wouldn't enter on Friday. You will wait for price to go above Friday's high on Monday. Fundamentally quite strong stock. Now, this is not the only biotech stock. INCY is a biotech stock that has this pattern. Let's look at that stock, but I want to look at the stock's fundamental also. Why did I choose INC? Not only because it was giving a very nice technical breakout setup, but I looked at its fundamentals at that time. I always look at fundamentals, needs only a minute or so, usually less, to check that up. Let's do that. I'm using Q Vital now to calculate a fundamental scorecard for INCY. What is it showing? It's using the color codes to show me that it is undervalued stock with excellent earnings quality. Earnings is due in 6th February. Makes money, not like the other many biotech stocks that don't make profit. It's earning a profit. Funds are accumulating, insiders are buying. And the stock was up with a breakout long setup when I shared it on Friday in the morning session. That was the reason to buy. Also 57% of peer stocks, even at the close on Friday, it was more bullish than bearish among the 92 peer stocks. So industry was strong as a whole. That was fundamental reason and industry reason to buy. And let's look at another stock. I didn't check that stock's fundamentals. Let's do that in live session. SRPT. It's a PR stock of INSEE. Now instantly we see the fundamentals are not as good as INSEE because it's not undervalued. Also earnings growth is negative. Also it's not making money. Earnings is in February. Fund accumulation is not so strong. Insiders are buying. Do you want to put weightage on analysts' predictions? I don't. But I do put weightage in my mind, certainly on fund accumulation and sometimes on insider buying, selling, especially when there are cases like Elon Musk selling Tesla shares. In any case, using the color coding, instantly we see that SRPT fundamentals are not as good as INSEE. So I would rather buy INSEE. Having said that, I did check out SRPT's technical charts. That's why I came to the stock. Let's look at the technical chart. What I wanted to show is that INSEE was not the only biotech stock that created an upper tail. INSEE was not the only biotech stock that broke out of trendline resistance. And INSEE was not the only biotech stock that is not in a downtrend. This is not in a downtrend, you may say, nicely breaking out after a cluster of bullish indecision. I mentioned in the master classes, I always repeat that one bullish indecision is important. A cluster of them we take more seriously. Is that a buy signal? No. But we get ready and we have a breakout. Once again, because of the upper tail, we wouldn't buy at the close. You could try to buy using intraday fine-tune chart. I didn't do that. I didn't trade SRPT. I did trade INSEE as I mentioned. But let's look at SRPT to see that if we could trade it using real-time fine-tune chart. This is a pivot chart template. In the morning session, I use 5-minute chart So I'm changing to 5 minutes. Now I'm explaining how to use the precision entry chart. If we found in C and we carried out a pair analysis, we plotted the pair stocks in QFinder, we could in real time see which ones were moving up, and SRPT was very nicely breaking out of the early range high. We could buy right at this point. Actually, I used the same technique on INSEE. Stop would be for the intraday, for the day, the stop would be below early range low. Stop was never hit, went up much more than the risk distance. So you could book partial profit when you saw that cluster of indecisions were happening and then price started to come down. You could hold partial position and close that remaining position at the end of the day. When you saw that the daily closed with an upper tail, you wouldn't hold it. That would be the way to use the fine-tuned precision entry chart to take an entry. I didn't trade SRPT. If I had checked SRPT, I wouldn't probably buy it because INSEE was better in terms of fundamentals. Both are in same industry. Why not go for the better stock? They hold out better when the market turns down. So INSEE was one stock that I shared. Let's look at some stock that I did not share. That is a stock I found on the Indian market and it is listed in USA also. Well-known stock, used to be one of the IBD favorite stocks long time ago. It used to be very high growth stock, now one of the largest IT companies in India, maybe one of the largest IT companies in the world. Infosys, or INFY, Infi. Why I like this stock? Again, I scanned on Indian market, I found the Indian ticker, but it is also traded in USA. So I'm looking at the USA ticker symbol INFI. Beautiful trend line support in weekly. The first bullish backdrop after a sharp drop, creating a base and first candle going up in the weekly chart. Very bullish pattern. In daily, we can see creation of the base hitting the same trend line support as we can see in weekly. Nicely went up. Now we had a bullish flow signal here, not a trend following long setup because the trend was of course not uptrending, but we had a bullish momentum flow. You could buy on that day and put stop below trend line support. If you didn't do that, that's fine. Next day it gapped up, created a candle with very long lower tail, and on Friday price is holding the gap up move. So if you entered on this day, that's great. If not, now if price can go up above Friday's high, that will be a possible buy point. In that case, you might not put stop so far below. You might put stop if price closes below these few direction lines. There are three direction lines coming together. If price reverses, closes below them, I think if it goes down, it will close below all of them together. That will be the stop, and the entry will be if price can go up above Friday's high. I actually took a small position in the stock because of my neutral view in the market. I am not trading large positions, trading smaller sizes. I did take a position in Infi on Friday, creating a nice base, has weekly memory support, and the stop loss is narrow. That is a constant. I take many kinds of trends. as you know. I'm very comfortable taking reversal trades as well as breakouts as well as trend following trades like flow setup or pullback. One thing is common between all these different trades is that stop loss is always narrow. That protects my account. So this is one stock I bought on Friday, and now I'm going to show how I used bottom-up analysis using QFinder, the new feature that I am testing out now, the 3 bullish momentum dots. You could do it, as I mentioned, using top-down, bottom-up, fundamental first techniques, but I am developing it. So let's look at the momentum signals. And now there are few extra buttons. Look for stocks with at least 3 green dots, these green colors, or at least 3 reds, or at least 1 green, at least 1 red. The 3 ones are more valuable. 1 may not be enough, so I use the 3. So let's do a live analysis. I will demonstrate how I found the stock. Again, it could be found without using the momentum signals also, because finally I don't trade unless there is a Q trade setup. So the Q trade setup will come from Q tab, the bullish daily tab. One of these setups: bounce, box, headwind, pullback, flow, breakout. These are the actual trade setups. Just having momentum signals is not enough for me to buy or short, but they may help if you have them to shorten the list. Friday market was bullish. There were many stocks with bullish signals. By the way, currently in the latest versions that I am showing, whether it is Edge or Vital or Finder, you will see the advanced decline statistics always update at the top. Let's try that out. Let's see, we have 1666 liquid stocks here. Let's click 3 green dots. Now you see what I mentioned is a way to shorten the list. Instantly I came down from 1600 something stocks to only 45 stocks that are having at least 3 green dots, sometimes much more than that. Not only that, it also ensures, as I said, it's not just simple like 3 green dots. There should be no red dots in any of these stocks, no bearish momentum, and they are not overbought in terms of either jump or thrust. That's all the work that this single button is doing. There are 45 stocks now. Am I going to look them up on charts? No, because I don't buy unless there is a Q trade setup. They are proven to be profitable for me. So I'm going to look up the Q setups for these 45 stocks. And with a single click, I cross-referenced with Q signals and setups, same 45 stocks, but not every stock has a setup. So I can use this button to only look at the stocks with a setup, 23. So from 1600 plus, with a few clicks in less than 1 minute, 30 seconds maybe, I came to 23 stocks. Am I going to open all of them? No, because I am able to do a fundamental analysis of these 23 stocks with a single click using real-time data, very reliable data coming from Refinitiv. It's a bit expensive for some people, but it's, in my view, much more than worth the price. And nothing is stored on my computer. It is retrieving the data from Refinitiv in real time. Once the retrieval is done, the actual calculation takes only a second or 2 seconds. It's retrieving data from Refinitiv server. Let's give it a few seconds. it has updated. All the stocks are up. Of course, they should be up because these 23 stocks have some kind of one or more Q trade setups on the buy side. Let's look at their fundamentals. I'm not going to look at 23 stocks. I'm going to click one green star to find stocks that are either undervalued or having high earnings growth. Either undervalued or having high earnings growth in the last quarter. Did that with a single click. Am I going to look at these 13 stocks, all of which are up? And by the way, I mentioned about the statistics of up down getting updated. If you go to the performance tab, performance panel, whenever we carry out an investigation, the statistics over, now real time is not there, market is closed, from 1 day to 12 months, it shows the statistics in real time, that how many are up down across all the periods. And this advanced decline statistics is available not only in the stock scorecard but also available in QH for sector industry analysis. I'll not go to that now, but now I am left with 13 stocks. Am I going to look at 13 stocks? No. See how I am reducing my list size, and in the process I am adding more and more probability in favor of my trade. I looked at momentum signals, didn't stop there, looked at Q setups, didn't stop there, looked at fundamentals, didn't stop there. I want to look at their industries. Again, with a single click, I am retrieving the industry scorecard of these stocks. I am interested only in those industries that are either very strong among the top 20%, or I may be interested in the one more industry. Let's click that also, that is accelerating among top 20%. And let's go back to the stocks list again. Now I'm left with only 4 stocks. Isn't it in some way amazing that from a list of all liquid stocks above $5 with at least 500,000 shares traded per day on average, that is a list of thousands of stocks, I came to 4 stocks. They are having very nice momentum signals, proper Q trade setup, strong fundamentals in very strong industries. You may look at all the stocks, but the stock that I found looks interesting is Wendy's. Let's look at Wendy's. WEN. Only 4. It doesn't take time to look at 4 stocks. But let's look at Wendy's. I looked at it already. And we could try to see if TradeStation can retrieve it faster during my webinar. Yes, it did. Let's look at the signals. Very interesting signals. In the weekly, we have these very long lower tails for 2 successive weeks, especially so in the current week, that stopped out weak hands. Now we can see why people who hold stocks longer based on weekly chart want to wait for the close of the week before exiting their position. They don't close just because price is coming down. That's a standard practice among many successful longer term holders and also position traders like IBD traders or HSA like traders. It's a very bullish pattern in the weekly chart, and very importantly we have a reversal candle. What do we see in daily? Market was down, right? But Wendy's was not down. In daily it's in an uptrend. Where is the drop in the stock? None. It came to the yellow direction line, beautifully created a false downside breakout with a gap down open and sharp rally up that broke the trend line resistance. It has given multiple possible trade setups. First, of course, it's a breakout setup with big move up 3. That's very strong bullish momentum with bullish pressure, with a bull release signal, with very high volume, with a bullish flow. Plenty of signals just on Q charts to consider buying. One thing to look at, consider is the stop would be a bit far. That is fine for some people. You could size the position accordingly by lesser shares because the stop is wider, or you could wait for Monday and enter using real-time fine-tuned chart. In the morning session I use 5 minutes, that way the stop will be very narrow. That's why I call it precise entry. But if you are busy during market hours, there is no harm in my view in this stock to take a position at the close on Friday, and the number of shares may be adjusted so that the risk amount in each trade remains same. That's the Q guidelines. That's what I follow. Wendy's one stock I found. Now I am looking at Q charts now, but I also saw that Wendy's has at least 3 bullish momentum. Let's look at them now. So from Q Vital, I am now looking up Wendy's technical signals, and let's look at Q signals and trade setups first. It is at price extreme high, though the market was coming down, this stock didn't come down. Went up on Friday with bullish pressure. Even daily has a reversal candle. It has a possible box setup, but that's not applicable because it is not moving sideways, but it has a bull release. It has a pullback setup because it came to the yellow direction line, went up from there. In fact, created a false downside breakout. That's even more powerful. It also has a breakout setup, and we saw it has a bullish flow. No flow long setup, but a bullish flow momentum. Flow is a trend following setup, pullback is also a trend following setup, breakout is also a trend following setup. So we have, okay, breakout can be a trend following, breakout can be a trend reversing setup also. In this case, it's a trend following breakout. So we have at least 2 Q trade setups. What about the momentum signals? Let's look them up. Single click. I can read them out on the chart also. Remember, I searched for stocks with at least 3 bullish momentum, and I quickly shortlisted, reduce the list size. It in fact has 7 momentum signals. What are they? Big move up, red candle, no, high, so in fact is bullish, so it will be green candle low, PSAR reversal, pocket pivot, Kahuna, Mobo breakout, Bongo. What else can we look for? Only thing we didn't have is BGU, Bible gap up, because in fact it gapped down and reversed. We didn't have ISOL failure because that was not applicable here. But we had 7 bullish momentum. And now let's look at the technical chart. When this using the momentum chart, what are the signals? Bongo, that's one signal. Kahuna, Mobo breakout, pocket pivot, PSAR reversal. Green candle low, 1 2 3 4 5 6, and the big move up 3 was in the other chart. 7 momentum signals, plus we have bullish flow also. Very strong chart, isn't it? Now this is not the only chart looking like this on Friday, and that's why I mentioned individual stocks may be buyable on Friday. I did buy some stocks. I did not buy Wendy's, but there are other stocks like that. I found another stock looking like Wendy's, and I'll end today's session after looking at that stock. That stock is ALHC. ALHC. I didn't carry out the complete analysis, and I will not have time to do that. But let's look at the technical charts. ALHC, in the weekly chart, it has a bullish backdrop, created a false downside breakout at the watermark level. In the daily, it has bullish traffic light that came after bullish flow, that came after creating a false downside breakout, creating a breakout long setup. Relative performance is ticking up sharply, very bullish close of the candle, big move up 3, bullish pressure coming out of a Q squeeze, and in the momentum chart bongo green, kahuna mobo breakout from a squeeze with PSAR reversal bullish side, large number of bullish signals. Again, one way to trade is to buy it on Friday, stop below recent low would be too far. I can see there are multiple Q direction lines here below Friday's close. So you may watch, if you bought it at the close on Friday, you could stop out if price closes below all those direction lines next week. If it continues to go up, that will be nice. You could book partial profit at the watermark resistance. This stock is also looking very strong in terms of technicals and a pattern that is similar to Wendy's. I'm not going to carry out the 360 degrees analysis for this stock. You could check out its fundamental strength and industry strength before buying. And if you find Wendy's is stronger, you might buy Wendy's. Of course, this is in a very different industry from Wendy's. There must be something happening in this stock or industry that resulted in this very bullish momentum from a squeeze on Friday. You could look into this stock. This is looking interesting to me. This analysis week after week, month after month, year after year shows that if you follow a disciplined approach using a robust system, you understand what the signals are, you know the trade setups, not just the signals, but wait for a proper trade setup, manage your risk, as I always say. I think the examples I share show that there is no reason not to do that trade profitably. Thank you, and I look forward to seeing you in my next session, which should be next weekend. Have a great weekend. Thank you again. Bye.